Alright, Amazon is 5% off. Let me look at the Lamborghini colors. Maybe I buy one next week. Oh my god, it went 25% down.
What did you do?
There's nothing wrong, honey. Everything is alright. It's a long-term investment. Welcome to TradingBits X. This channel is all about decoding the economy from the ground up. No noise, just sing. Congratulations, you're not an investor yet. You're a biological volatility machine. Today we're looking at why the market acts like a bipolar teenager on an energy drink vendor. If you ever felt personally attacked by a red candle, type "the market is stalking me" in the comments right now. The information versus emotion war. In textbooks, markets are efficient. They process data, calculate value, and set a fair price. It's clean, it's logical. It's also a total lie. In the real world, prices don't move because of spreadsheets. They move because of us. Fear, greed, and the desperate need to fit are the real fundamentals. This is why markets don't just move, they overreact. They scream when they should whisper and throw parties when the house is on fire. If you want to stop being the liquidity for big players, you need to understand market psychology. Smash that subscribe button, hit the like button, and dive into the anatomy of a market breakout. The collective brain and the feedback loop. The market is a voting machine in the short term. But here's the problem. The voters are terrified. Price overreact because of reflectivity. When a price goes up, it's not just a number, it's a signal. That signal attracts the crowd. The crowds bring the momentum. The momentum creates the FOMO. Suddenly a stock that worth $100 is trading $150 because everyone is buying because it's going up. It's a feedback loop. The higher it goes, the more rational the madness seems until it isn't. What was the one trade that you entered only because you saw everyone else talking about it on Twitter or Reddit? Be honest, we'll be in there. Tell me the kickers in the comments below. Narrative gravity, the story we tell. Humans are hardwired for story, not a statistic. We don't buy assets, we buy narrative. A narrative is a simple story that explains a complex world. AI will replace all jobs, or crypto is the death of banks. When a narrative takes over, reality becomes optional. This is how we get narrative gravity, where the story pulls the price so far away from the fundamentals that the two aren't even on the same planet anymore. Think about it. Why does a company miss earning by 1% and the stock drop 50%? If the business 50% worse? No, but the story of its perfection just broke, and once the story breaks, the overreaction is violent. The speculation and the disconnect. This brings us to the danger zone, speculation. This is when the market completely disconnects from the real economy. When money is cheap and optimism is high, people stop asking, what is it worth? And start asking, who is the greatest fool who will buy this from me tomorrow? We'll see it in every bubble. The displacement, a new tech or new era begins. The boom, smart money enters. The euphoria, your Uber driver start giving you stock tips. The crisis, the first big player exits. Wait, stop. Before we get to this end, share this video with one friend who thinks they're genius because they bought a meme coin last week. They need a reality check. The chain reaction crash. Why does the crash always happen faster than decline? Because fear is more contagious than greed. Panic is a chain reaction. Step 1, a bad headline hits. Step 2, the weak hand sells. Step 3, this triggers stop losses. Step 4, the prices drop, triggers margin call. Step 5, forces liquidation, creates a vacuum where there are no buyers, only sellers. The market isn't just connecting, it's purging. It overshoots to the downside just as hard as it did to the upside. This is where the bipolar nature of the market is most visible. The same asset that was the future on Monday is garbage on Friday. Reality hasn't changed, the psychology has. So how do we win? You stop being a cell in the collective brain. The best investors aren't the ones who can watch the world end on Tuesday and look at the data on Wednesday. When everyone is certain, that's when you should be most confused. When everyone is terrified, that's when you look for the discount. The market is an emotion machine. If you can't control your own emotions, you have already beaten 90% of the people on the other side of the screen. Are we in a state of euphoria or fear right now? Look at the chart and give me your temperature checks below. If you find value in this breakdown, you know what to do. Hit that like button, subscribe, and hit that bell notification. We're building a community to discover the truth. Now we talk about why the market disconnected from reality, but what happens when the economy and the markets are telling two completely different stories? You won't want to miss the next video right here. And remember, money, markets, we're trading the future. See you in the next one.